Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It's lecture time, and this week, guys, we're going to talk about how things happen matters, but it shouldn't, losing streaks, how to overcome losing streaks, how to be a professional trader instead of a novice. A lot of you guys are just chasing that proverbial tail. Well, today we're going to talk about how to be a professional, okay? There's a lot of psychology in this lecture. And I think you're going to find it to be very helpful to your trading. All right. There are some charts, but it's mostly psychology based. And like I said, a lot of this business, 99% of it is between the ears. And how you handle losing streaks is a very important part of that. So we're going to get to that today. If you like these lectures, please click that like button, hammer that subscribe button. I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is how things happen matters, but it shouldn't. The order or sequence in which things happen in general in life has a great impact on how we view the world, how we view our trading, just how we view stuff in general. And in trading, it's a very big deal. And I think sometimes we let the sequence of events affect the future sequence of events, if that makes sense. If, for example, you get on a 5, 6, 7 trade winning streak, there's two types of personalities. There's the one type of personality that says, oh my gosh, reversion to the mean is coming soon. I'm scared to take a trade. Then there's the other type of personality that says, I got the hottest hand in town. Let's just keep pushing that button. And then they sometimes overtrade. They're like, I can't lose. You're right. And then, of course, there's the middle ground. But there are different types or personality types, and it affects the way the future happens. I shouldn't say the way the future happens, the way you view the future. So the past does affect the future. And the same goes true if you're having on a nasty losing streak. Jeff Yates, for example, recently was on a tough losing streak. But he's since come out of that, and I suspect he'll have a reversion to the mean, where that difficult losing streak will probably turn into an extended winning streak. So the reason I want to talk to you guys about this topic is because, one, it's been a couple years since I've done it, and two, I had a nasty start to February. And I want to show you guys kind of where I was. I'm going to bring up my P&L and do all that other stuff from February. I'm going to show you every day of February, okay? And just the sequence in which things happened, so that you can kind of see, not only reversion to the mean, but how we mentally handle difficult situations. And it's coming more to me now. I'm disappointed. I should have actually put in my trade tracking spreadsheet as well. And the reason I'm telling you this is we have a preponderance, I think, as traders, that when things go wrong, to continue to push the button and take more trades. And when things go right, a lot of times we just, hey, I'm one and done. Do you know what I mean? So let's dig in and get to it. So, may the odds be with you. Do you believe they are? What does that really mean? And this really shouldn't say why most people fail. Okay. But either way, when you trade, you have a certain expectancy, right? You could be a 1R all or nothing trader. You could be a trader that takes 4R targets and everywhere in between. And within that, there's going to be a level of expectancy that becomes common. We have done the lecture before where we talk about blackjack and the odds of getting blackjack versus the odds of stopping out, et cetera, and so forth. And we also looked at the odds of, if you are a 50% batting average trader versus a 40% versus a 60%, the odds of losing streaks. You guys remember that lecture from a month or two ago, whatever it was, where it's like, hey, if you're a 50% batting average trader, the odds of you having 5 consecutive losing trades is actually quite high. It's very high. In fact, it's a certainty over the course of a trading year. If you took 200 plus trading days, the odds that you're going to have 5 consecutive losers is almost a guarantee, right? So do you believe in the odds? And if you do, okay, and this is the key here. Listen to this. If you log off after this, fine, but listen to this. If you do believe in the odds, why are you letting the odds affect your trading? Think about what I said. Having 5 consecutive losers is simply part of being a 50% trader. It's just a statistical guarantee that if you are a 50% batting average trader, you will have 5 losing trades in a row at some point. At some point, okay? We just don't know when. It could be the first 5 trades you take of the year. It could be the last 5 trades you take. In fact, it could technically go 2 years. It's probably not going to happen like that, but you could go 2 years without having a 5-trade losing streak. But if you bat 50%, it will happen. But when it happens, what happens? We go crazy. We go nuts. Like, oh my God, what the hell is going on around here? And you're like, but it's a statistical guarantee. So it's not if it's going to rain. It's when it's going to rain. And how are you going to handle it when it does? And the flip side of that is true too, right? So the odds, if you're a 50% batting average trader, that you're going to have a 7-trade winning streak, well, at some point, they're very, very, very good, almost guaranteed. But when you have a 7 or 8 trade winning streak, you don't want the losing streak to happen. But when it happens, you get all upset. And you're like, well, it's just reversion to the mean. You got to get back to that 50%. So how things happen matters, but it shouldn't. Okay? So anywho, that's that. And let's dig on in. All right? Sequence matters. The fact is, how things happen matters, but it shouldn't. The odds are the odds no matter what order things happen in. And we talk about this a lot, guys. A 50% batting average with a 2.0 win-loss ratio can manifest itself in many different capacities, in many different ways. We could win 5 in a row and then lose 5 in a row. We could win 5 in a row, lose 5 in a row, then win 5. We could win 1, lose 1, win 1, lose, and every other combination in between. Okay? Now, obviously, let's be honest. Most people would prefer to win 5 in a row before they lost 5 in a row, because if you start off losing 5 in a row, you might be down 5R, and it might affect your mental approach. You might be down on yourself, negative, and those negative feelings manifest themselves in the quality of trade you take, potentially. Not if you're a professional trader. You just know, like Jeff Yates, he's like, geesh, literally, that's what the guy does. Jeff Yates being depressed is like, geesh, guys. And that's it. And he's like, all right, it's dinner time. Like, he's that easygoing and calm about things. Some of you folks, losing 5 trades in a row, your mouse is on suicide watch, right? And your keyboard's on suicide watch, okay? But other people are like, that's just the way it is, no big deal. So you need to sort out what type of trader / personality you are, because it's going to happen. I'm not telling you it might happen. I am telling you statistically it will happen. So does your mouse need to be on suicide watch? Or are you like Jeff Yates where you're like, oh, geez, guys, this is frustrating. And that's like the extent of it. Oh, this is just frustrating. And other people are out there breaking stuff. Totally different mindset, right? You will win again. Right? You will hit the ball again. It will happen. And likely a reversion will happen, and you might have an excessive winning streak to balance it back out. Okay? All right? So, how does it overall affect your trading is the question. Well, losing streaks sometimes cause us to do things that we don't normally do. First thing it does is we question ourselves. That's the very first thing that happens is, man, is it me? Is it the market? Am I just unlucky? But you start pondering things in your head, right? You're like, oh my gosh, why is this happening to me? And you think for a second, you're not that important to the market, right? You're just not. I'm not trying to be rude. It's a good thing. You're not important. There's no why it's happening. It's supposed to be happening. Okay, I want to say that again. It's supposed to be happening. It's part of being a 50% trader. And again, I'm using 50%. It could be a 70% trader. It could be a 30% trader. It's part of being that type of trader, right? So when a baseball player hits 3 out of 10, they don't go, why am I hitting 3 out of 10? No, that's the type of batter they are, hitter they are, right? So sometimes we become more aggressive trying to get our money back, right? You guys ever had, and we call them revenge trades, but you ever have a trade like just take you to the woodshed, like take you to the ringer, like play mental mind games with you, and then ultimately just basically screw you? After it just does all those things to you, it tags you by a few pennies and then rips and works and does all those things to you, and you're like, it's like being taken by a scammer. You're just sitting there and you're like, why? Like, you can't handle that somebody, quote, took you, right? You just mentally, your ego can't handle it. Well, in trading, it's kind of the same thing, right? Every once in a while, we have that trade that gets us. Well, guess what? Every once in a while, 2 or 3 of those trades happen. For example, and I'm just making this up, but it's come from experience. Anticipation stop, which is like once or twice a month. Stop on the penny. Anticipation stop. Miss target by 2 cents. Tag you at break even. You're sitting there like, mother effing what a, right? Anticipation stop, -1. Tags you by a couple pennies, that works, -2. Anticipation stop, 3rd trade. So now you're -3R, and you're finally on the 4th trade like, all right, we got this. We're going to that 2R target. It goes a nickel from your $5 target. Like you got a $5 target. It goes a nickel from it, comes all the way back down and gets you at break even. You're like, you son of a bitch. And you're like, what have I done to the universe to deserve this? And the answer is nothing. It's just statistical odds happening, playing out over a short period of time. What should have happened over, say, 50 trades happened over 4 trades. And you weren't mentally prepared for it, so your mouse died. Your mouse needed to be sacrificed for that. Your keyboard, your monitor, the people around you had to listen to you. But in reality, nothing unusual has really happened. What is unusual is the time frame in which it happened, and you're not used to it happening in such a short time frame, and therefore you are out of your comfort zone. And when you're out of your comfort zone, you tend to do things that are unusual. In this case, perhaps being more aggressive, trying to get your money back. Perhaps becoming less aggressive to the point where you're nervous to take another trade because you're so scared of another loss. That's happened, right? You're like, oh my gosh, I've lost 5 in a row. If I take another trade, it might be 6. The way things are going, it's probably going to be 6. See that negative mindset? We all do it. We've all been there. We've all done it. Okay? Become overly strict with patterns, thus never taking trades. Become too lenient with patterns, taking too much junk. Like so many things come into your ether and your mindset that it's not the person you were before this streak happened. Okay? Raising risk to compensate for losses, lowering risk to help calm the stress from all the losses. Right? We do a multitude of different things when losing streaks happen. Okay? So what's the answer? Review all of your trades. See if something is wrong. Make some adjustments if you find something wrong. Get back to trading consistently again. But overall, the answer is do the same thing you've been doing. I don't mean the more aggressive trading. I mean the stuff you were doing before these shenanigans happened, before the losing streak presented itself. Those things, go back to doing that. Go back to being the trader you were before the losing streak, which is the same trader that is the losing streak. Because the same trader that's experiencing the losing streak is going to experience a winning streak as well. It's called reversion to the mean. You're a 50% trader. Guess what? You're a 50% trader. I'm going to say it again. If you're a 50% trader, you're a 50% trader. It just might not be this week. It might not be this month even. But over the long run, you're still that same trader. So act like it. Be a professional. Act like you're that trader. Okay? Because you're going to become that trader. In fact, when you're losing, you still are that trader. Does that make sense what I'm saying? I'm trying to basically say, keep doing what you've always done because that's got you where you are today. Now, if what you've always done is a losing trader, that's not good. I'm talking about losing streaks, which means people that typically are doing okay and they just happen to be going through a tough time. I'm not talking about the perpetual loser. That's a different conversation, right? The perpetual loser is somebody that we need, to have a different discussion for. So important points, understanding what's required. Look, recognize how difficult the business is. I'm talking to professionals right now. I'm not talking about novice. I'm talking even when you've been doing this 10 years, you will go through tough times. That's just life. That's just life. It's a roller coaster ride, this life. So is your trading journey. It's a roller coaster ride. Every day it can't be peaches and cream, right? So mental, psychological challenges. Realize, am I susceptible to these? And if I am, what happens when these challenges present themselves? Who do I manifest? What do I manifest? Who do I become? Acceptance, recognition is number one, right? Recognition is number one. Like, whoa, How do we understand recognition? By videotaping ourselves every single day. And specifically on the losing days, going back and finding out, what do I look like on those days? Was it just a trade that didn't work and I acted cool and calm? Or did I lose my shit and start taking 3 and 4 and 5 trades? So videotape yourself. Hours of hard work. That doesn't change whether you're new or whether you're professional. Consistent adjustments. That never changes. Even when you're a professional, you're always making minor tweaks because the market is ever changing. Not major tweaks, minor tweaks, all right? The stress of financial risk. Guys, I don't care how long you've been doing this, and I don't care how flush you are. We all have an ego. If I lose 4 or 5 trades in a row and I'm down 15, 20 grand, I'm pissed. I'm pissed. It's not the money. The money, I have the money. It's not the money. I'm just upset. So it's still stressful is what I'm saying. We're upset at ourselves. We're upset at the market. We're upset because it's not going as planned. But really, but hold on for it, and this is the aha moment. It is going as planned. It is. If you are still within the statistical parameters overall for the year, for the month, for whatever, it is going as planned. It's just not today going as planned, or it's not this week going as planned, but overall it's going as planned. And that's what you have to do, is take a step back and tell yourself, despite how I feel right this moment, the big picture still suggests that I'm a pretty good trader, and this too shall pass. And I want you to write that down. This too shall pass. Because it will. No matter how nasty that losing streak is, it will pass. No matter how great that winning streak is, it will end. Repeat it. No matter how nasty the losing streak is, it will pass. No matter how amazing your winning streak is, it will end. Everything ends. Everything. The good and the bad. Okay? So this is the only job that will cost you money each day if you're not focused. So continue to improve by improving yourself through education, through trading buddies, trading partners, reviewing your trades, constant analysis, prepare, and train for the market every day. It's your job. It's your career. It's your livelihood. Treat it like that. Okay? You ever look at professional athletes? It's not that they train 12 hours a day, but they're very efficient, very effective, and very deliberate when they train. Very deliberate. Okay? So don't be afraid to make necessary changes to improve, but be sure you have a clear, objective reason for doing so. This sounds so simple, right? It sounds so simple. So few people do it. Seriously, the clear, objective reason for changing. Many of you are like, yeah, I had a bad losing streak, I'm going to just change. Well, how do you know it wasn't just an anomaly? Or they just changed something because they see somebody in the chat room, oh my gosh, that guy's killing it. How many, okay, you guys remember Cass from the chat room, right? C-A-S-S, not C-A-Z, okay? I bet you, and I don't know, I'm just assuming, okay? I bet you a lot of people changed their approach to trading when they saw Cass trade, because he was very good at what he did. He was outstanding at what he did. But you saw the wins, but you didn't see the time and effort to put into that style of trading. You don't know his personality. You don't know his abilities to get in and out of positions very quickly. You don't know his risk tolerance. But all of a sudden, what you do know is watching somebody win all the time, right? And you're like, well, I want to be like that too. But you may not be cut out for that specific style of trading. You might be, but you might not be. But you went off and just, I don't know, threw your trading plan in the trash and started all over again. You're like, well, I want to be like him, right? And I'm not saying you can't learn and be better, but be careful when you do things like this, all right? So, at the end of the day, you want to ask yourself, are you an average trader or are you a professional trader? This is out of professional trading strategy. Why am I bringing this up? Because average traders let losing streaks really, really bite them and dig into them and frustrate them. And not just dig in and frustrate them. Wait for it. Change their approach to trading. Average traders let losing streaks completely rip apart their trading plan. Take too many trades, risk too much money, right? That's not acceptable. Now, if you have come to the realization after deep reflection and review that the trades you took were crap, then an adjustment is warranted, right? An adjustment is necessary. But if you've reviewed those 5 trades or 10 trades and you've come to the realization that outside of maybe one outlier, they're all pretty good, why would you change? Jeff Yates, note, he didn't change. He just kept being Jeff Yates, and the losing streak ended. Unwall, oh shit, it's like 4 or 5 years ago now. Damn, time flies. I mean, he was down like 13R at one point in a month, and he was frustrated. And I went over his trades with him. I was like, honestly, like, there's a few in here. Of course, there's a few that are just, could have been better. But for the large part, 85% of these were pretty good. He ends up making 3 or 4R that month. Came out of the streak strong. That's what happens. So ask yourself, are you an average trader that is doing the wrong thing, and that's why you're losing? Or are you a professional trader that's doing the right thing, and this is just a statistical anomaly or reversion to the mean? Right? One of the two. Both of those are acceptable because they're expected. Right? Statistical anomalies do happen, and over a long enough period of time will happen. Okay? So you just ask yourself these questions. Do you sell too soon? Do you give back profits? Are you desperate to recoup losses? Do you overtrade? These could be some of the reasons you're on a losing streak. But if you're not doing any of these things and you have reviewed your trades, then I wouldn't be pissed off. I'm not saying the initial reaction isn't upset, but overall, I wouldn't be pissed off. So you need to ask yourself where you fall in the average trader versus professional trader realm, because the average trader realm leads to frustration and failure because you're just not doing what you're supposed to be doing when you're supposed to be doing it, right? Ask yourself, do you believe in yourself? Do you have a poor self-image or a negative attitude? This is a problem. You ever notice, and I'm sure he's doing it right now, although he's been doing a lot of it lately, Unwall, he's probably, honestly, doing some self-improvement over the next 4 or 5 days. I guarantee it. That's who he is, because his self-image is very good. He doesn't have a negative attitude. He has a positive attitude. He takes challenges and says, how can we fix it? He doesn't sit there and sulk and go, oh my gosh, this sucks. This is bad. This is terrible. He literally goes, okay, this isn't what I wanted. How do we make it better? Think about that attitude adjustment for your own trading. Okay, the result of this trade isn't really what I wanted, but how could it be better? Could I improve my own trading? Could I improve my approach to trading? Or did I do everything right and it just didn't work? Okay, that's an answer. But you don't know any of that until you dig deep into it and figure out, one, what happened. And then after you figure out the what, then it's easier to sort out the why. Sometimes things just don't work. Or maybe it's supposed to fail because you took a bad trade. You know what I mean? So you really have to build on that confidence, because if you don't think you can do something, you're right. You probably can't. You have to get to that. And I know it's chicken and the egg. I get all that. But you have to build confidence, okay? Because at the end of the day, really, you're not, I mean, don't get me wrong. We are trading against our own personalities, right? We are trading against ourselves to some degree in terms of our emotions. But we're really trading against the best, right? The market is filled with the world's best traders, okay? Hedge funds, HFTs, you name it. And whether you like it or not, or think about it or not, every time you take a trade, they are either on the side of your trade or against the side of your trade. That's a factual statement. They are either on your side and they're going to carry you to your target, or they are against you and they're going to carry you to your stop loss. Because trust me, your 500 shares or 5,000, hell, your 50,000 shares don't matter. These funds matter. $10 billion funds, $30 billion funds, HFTs, they matter. You don't. Okay, so you have to be able to compete against other professionals, because you're not likely going to be able to stand on an island by yourself and get this done. Okay? Every day come in with the same positive attitude. Poor planning, no planning, plan to fail, right? Are you not treating it like a business? How are you approaching the business, right? Do you lack discipline? Do you lack capital? Something we don't talk about that much. You know why, guys? Let's be straight for a second. I'm just going to be deeply honest with you. Why don't most online trading firms talk about lack of capital? Talk to me. Give me an answer to this one. I haven't asked for you guys' participation today yet. Why do you think most online YouTube channels, online trading firms don't talk about lack of capital? Why? Simple, right? Because if they do, they are limiting their potential client base. If they do, they're limiting their potential client base. If you tell, for example, everybody, you need a minimum of $10,000 to be a successful trader, well, everyone under $10,000 is going somewhere else now. They're going to the company that says you only need $2,000. Guess what? All the people that have less than $2,000 are going to the company that says you only need $200. And all the people that have less than $200 shouldn't be trading, but they're going to the company that tells them you only need $1. Okay? So they don't want to limit their client base by saying that, but I'm just going to be straight with you. Lack of capital exists. It's a real thing. You can't have $1,000 and expect to make a living in this business. It's not going to happen. Now, can you be a trader and trade? Yes, but you can't expect to pay your bills with a $1,000 account. Well, Jared, I saw this guy online and he had $573 and he turned it into $353,000. You're like, well, dude, one, that's unusual, and two, that person who did that probably had a significant amount of experience when they did it. You do not. You're new. You're brand new. You've seen me do it, but note, I don't talk about it. It's been 5 or 6 or 7 years since I've even mentioned this comment. I've taken $2,135, $2,130, and turned it into $100,000, but I don't talk about it because I did it when I had 10 years of experience. You're not going to do that with 1 year experience or 30 days or whatever. So why talk about it? Why talk about it? It's not realistic for you. It's not likely for you. So lack of capital does exist, okay? Not enough operating capital, not enough buying power, not enough money to get an education, not enough money set aside to pay your bills. Why? Because, guys, relying on trading to pay your bills when you're brand new is not a good approach to any business. Every business needs cash flow, and that's just for the business. Your personal expenses are your own. Your mortgage, your car payment, your whatever, electricity bill, that's separate from the business expense. And if you're struggling to pay the personal expenses, the business is going to suffer. Separate the two. Get a job. Have enough money in the bank. Why? Because this is stressful enough without having money problems. Let me repeat it. This business is already stressful enough without having ancillary money problems. So let's take a look at a couple charts. All right. How things happen matters, but it shouldn't. This was a 3-bar play on PayPal from, I don't know when it was, honestly, I forget. 269 was the entry, okay? Stop loss of 267.50. Well, depends how you looked at this. This could have stopped you out twice, right? 2 full stops, then rips. Why? Because if we draw this and do this twice, right there, okay, right there. Do you see that right there? The first one is under bar number 2's low. That's right out of the textbook. Well, guess what? It stopped you out, left the bottoming tail. You get right back in it. You're like, oh, I got this. I'm going to get this bottoming tail. Get right back in it. Pops up, $1 or something, right? $1.20, whatever. Stops out again, and then goes higher all day. That sucks. Okay, there's no other way to sugarcoat this. There's just nothing that you can say. You took an idea that appeared to be the right idea. You took a quality pattern. You even got back in on a bottoming tail shakeout, right? On a bottoming tail shakeout. And you're like, sweet, okay, it sucked that I stopped on the first one. That stinks. I'm bummed. But I'm a professional, and I'm going to get back in. And when I get back in, this thing starts to rip, and you're like, see, I knew it. Big ass red bar comes in, monster red bar comes in, stops you out the second time, and then chops around, and then right around 10, it just decides, I'm going to go higher for the rest of the day, and it goes up $5 higher on a $1.50 stop loss, which is over 3 to 1, and you sit there with your hand in your pants, and you are pissed. Pissed. I've had it happen to me before. Why do you think this chart is on here? I'm raising my hand. This is me. What do you do about it? Nothing. Just take it on the chin. Sure, you may have gotten back in at 268. That's a possibility, but probably not. Okay? Just take it on the chin. And you say, okay. It is what it is. 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 But in the moment, you're looking for another trade. You're like squeezing that little stress ball and you're destroying it. You're like popping stress balls. Because you're like, I can't believe this thing got me twice and it was a good pattern. I did nothing wrong and of course it worked. So mentally, tough frame of mind. Okay? How things happen matters. 1.5 hours into a full stop. What's the lesson? Well, the lesson is shit happens, right? This triggered and shook out and then went higher. I know. You're looking at it going, oh, it's a sweet trade. I know. If you got back in, it was a sweet trade. But the initial trade literally go peekaboo, stop, pop. Now this is what I call nastiness. Stop loss down here gets tagged, right? Then, if you do get back in, wait for it. If you do get back in, this happens at the end of the day. Look over here on the right-hand side. Like, son of a bitch. It takes all day, hangs around, what, a 70-cent gain? Something like that, and you're like, well, I'm up an R and a half, R and a half, R and a half, R and a half. Boom, end of the day, stop out. And why? Because let's be honest, guys. That should have held. I just added that there, right? That should have held. Pivot, bounced, retest, went back to the high of the day after the retest. Bottoming tail over here. And then it drops. And you can't see it. It's really, really, really hard to see, right? It's really, really, really hard to see. But can you see a topping tail right there to like 132, like 30? It's right there. You can barely see it. So this thing stops you out and then goes all the way back up. It's frustrating, right? It's frustrating. But it happens. Here's another example. Okay? Shit. Sorry. Made a mistake. Hold on. All right. Okay. Gaps up, goes higher, pulls back. Not bad. Not bad. Except for the fact if you follow this blue line, let's make it pink. Let's make it pink. Follow this pink line, okay? Uh-oh. 2-minute buy setup stops out, then rips. If you have no 84% play in your plan, you just stopped out on this thing. And again, I'm showing this on a 1 minute because the 2 minute looks great. But what you're not seeing is it actually triggered already and then stopped you out. This is also another reason, and I don't know if whatchamacallit, Yaroslav is in here right now, but this is why you give your trades more room, right? This is why we give our trades more room, okay? So again, you're looking at this, and it tags you. If you got back in on an 84% play, you get your money back, no problem. And this was actually a really decent play. And the bottoming tail made it better. So you probably should have gotten back in. But if you don't have that in your plan, you just stopped, and then you're going to sit there, and you know what it's like. We've all been there, and you're just going to stare at it. You're going to stare at it, and you're going to stare at it, and you're going to call it names. You son of a bitch, you piece of shit, you mother... And what are you going to do? What are you going to do? You're going to take a break and go for a walk because that's what you've been told to do. And you're going to come back and this thing's going to keep going higher and you're going to go, you son of a bitch, you motherfucker, blah, 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 blah. And you're going to do it all over again. You're going to take another walk. And you're going to come back and it's still going to keep going higher. And there's nothing you can do about it. Just offer your chin up, offer your cheek up and say, slap this side too, please. Because this is reversion to the mean. This is what happens sometimes. So, now, only a few more slides left, but this is the slide that I wanted to show you guys. Okay? This is my February. Okay? This is my February. And again, I apologize. I should have put my trade tracking spreadsheet on here. I have two sheets. I have a P&L sheet and a trade tracking spreadsheet. Okay? I do both. All right? And again, I should have put that up here because I wanted you guys to see the losing streak. Okay? This is February, okay? If there ain't nothing to be done about it, it ain't even a problem. It's just an aggravation. It's the truth. Good movie, by the way. No Country for Old Men. I started the month off up about 1/2 hour, okay? And then I went 1, 2, 3, 4, 5. 5 days in a row. These aren't trades. These are days. Guys, I don't remember the last time I had 5 consecutive down days. It's been a long time. Started down about an hour and a half. You're not thinking anything of it. The next day, not even a big deal, third of an hour. The next day, 0.4 hour, not a big deal. This day, like a quarter hour, not a big deal, okay? This day, well, I don't know, what is that, like 3/4 of an hour or something like that. They're not even that big, but it's the mentality. It's what it did to me mentally that pissed me off. I'm like, holy shit. One down day, okay, whatever. I don't even think about it. Second down day, not a big deal because it was a small down day. By the time you get to the third down day, you don't give a shit if it's $1 or $3. You're just like, what's going on here? I don't have 3 down days in a row. This doesn't happen. What the F? Right? That's what you say. Okay? And you sit there and you're like, damn. Well, guess what? I woke up the next day, and effing happened again. And that's 4 days in a row. All right? Carried through a weekend. 4 days in a row. You're like, who have I pissed off in the world? Now you're starting to sage your house. You're starting to go to church. You're going to confession. You're just sitting around going, who have I pissed off? Okay? And guess what? It's not over yet. It's not over yet. I wake up the next day, come in, bam, happens again. Now you're like, you're looking outside. You're like, I don't see any pigs falling out of the sky. I'm not walking anywhere near a cliff or a bridge or anything that's unsafe because my knees are getting weak. I'm like, what is going on? This is so far outside of my statistical experience. I don't know even what to do with myself at this point. But I didn't break the plan. I was taking multiple trades, right? So I definitely, and this is why I wanted to show my tracking spreadsheet. So you can see I took more trades during this streak. And then what happens? Yes, there was a speed bump in here. This was a bad day for me, okay? I don't normally, if I'm down 2R, I stop. My plan allows me to go to 3, but if I'm down 2, I almost always stop, okay? But this aside, even with this nastiness, the next, I don't know, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days. I was up 12 of those 13 days. So I started off November down $13,569.63 in 6 trading days, about 2.7R. Okay? The next 13 days, I was up 12 of them, and I made $33,567.75. Guys, that $33,000, that's with the minus 15 grand. That's with this nasty day in here. And really, I should have stopped at 10, should have been 38. Net total, I still pulled out 20 grand. Is that a great month? Fuck no. It's like 4R. It's not a great month. But that's not the point. This is double reversion to the mean. Do you know why I'm calling it double reversion to the mean? Anyone want to know why I'm calling it double reversion to the mean? There's a hint in there. In the text. The hint is this line. It's why I'm calling it double reversion to the mean. I had 11 consecutive up days before that 5-day losing streak. Then I had a 5-day losing streak. Then I won 12 out of 13. So do the math on that. Right? So that's 11 days, and then 5 losing days. So that's 16 days. Then 13 days is 29 days. So over those 29 days, about a month and a half, roughly a month and a half, okay, there are 6 down days. Well, that's kind of back to normal, correct? It's kind of back to normal. If a normal month is 15 up and 5 down, and now I'm down 6 days in 29, I'm actually a little better than that, aren't I? So it's my version of calling it double reversion to the mean. I had 11 up days in a row. I'm going to have a pullback, and I did. It was just a bigger pullback than I expected. I was expecting maybe 2 or 3 down days over the course of 7 trading days, right? That's my reversion to the mean. okay, I have 11 consecutive up days. Over the next 8 trading days, I might have 2 or 3 down days. Right? Well, no, I had 5 in a row. This hurt. This was painful. I was frustrated. And then after a period like this, we started off March really well, and then the last 5 trading days have been choppy. Right? The last 5 trading days have been very choppy. Up, down, up, down. Well, no, yesterday was up. Whatever it is, but you get the point. Back and forth, back and forth, back and forth. Reversion to the mean. Okay? So where I'm going with this is, how are you handling it? Are you understanding that what happened or what is happening to you is normal in the big picture, or are you just losing your shit and doing something much different, meaning trading the way you shouldn't be trading, over trading, under trading, just not doing what got you there, if that makes sense. Because reversion to the mean it's always happening. You ask yourself, are we going to get a perfect 50% all the time? No. Gosh, no. It's going to present itself in very strange ways sometimes. And you need to ask yourself, is this just part of the bigger picture, or is there something wrong because I'm doing something wrong? And if you go back and you check and you realize you haven't done anything seriously wrong, then keep doing what you've been doing, because in the big picture, it's working. It's working, right? My biggest mistake in this month was taking that 3rd trade on this day, going 0 for 3. I typically stop at 0 for 2. And you can see that on here. And my up days, guys, my biggest up day of the month was 1.5 R. Why? Because I one and done it. One and done, one and done, one and done, one and done, one and done. Now, part of that was not finding a ton of trades, and part of that was not wanting to give it back. I remember these days very clearly. And I remember looking at a second trade on several days going, I'm not taking it. I need to feel the winner. Does that make sense what I'm saying? Like, I knew myself, and I realized, I'm like, how are you going to feel, Jared, if you're up 1 R and then you take a trade and you go break even for the day after 5 consecutive losing days? I would feel like shit. So I knew I needed to feel the winner. But was it statistically the right thing to do? No. When I saw a second trade that was pretty good, I should have taken it. And statistically, it worked. So, and you could argue I cost myself some money potentially. Right? So, I wanted you guys to see this because it is very recent. This is a month ago. Right? Just over a month ago this happened. But I dug myself out by doing the same thing that dug myself in. I didn't do anything terribly wrong during the losing streak. It just reversion to the mean. That's all. I deserved it. I was up 11 consecutive days. I deserved it. And what's going on right now, back and forth, back and forth, back and forth, I deserve it. Because I was up 12 of 13 days right here. You know? There you go. So, what's the overall lesson? Good trades fail, bad trades work. Some markets aren't conducive to your management approach. Some markets are extremely conducive to your management approach. How do we tell the difference? Sometimes you can't. What can we do about it? Ask yourself one question. Would I take that trade again? That's it. It's the only question you can ask yourself. Would I take that trade again? If yes, carry on. Odds are odds. If no, figure out where you messed up. Approach every day with consistency. Ali is very famous in here for saying, variation is a process killer. He is correct. If you've been a successful trader for a while and you're hitting a tough patch or a losing streak, there's no reason to get all bent out of shape over it. I don't mean disappointment. We all get disappointed. That's normal. But there's no reason to get bent out of shape because it's nothing you really did wrong. You didn't do anything wrong. So if you didn't do anything wrong, keep doing what you've been doing. It will come back to you again, right? The goodness will eventually come back to you. So just ask yourself that. Would I take that trade again? Ask yourself that over and over. And if you keep losing and keep losing, then maybe you need to get some help because maybe your view or your version of a good trade isn't such a good trade and you need someone else's opinion. And that's okay too, right? And that's okay too, all right? Acceptance. Accept that some days you're the pigeon and some days you are the statue. But guys, we're the pigeon enough. Trust me. We get our winners. We do. We get our winners. You just need to ask yourself, would I take that trade again? This is a business. I don't like saying this, but it's never easy. This business will never become easy. It will become comfortable, but it's never easy. But before you jump out of your chair and go, oh my gosh, what do you mean? It's never easy at the top. When you're a professional athlete, ask Roger Federer, ask Novak Djokovic. In fact, they've talked about it. They go, you guys come out and you see us winning all the time. You see me winning all the time, and you get this understanding, this idea that it's easy. It's not easy. You see me beat a guy 6'1", 6'1", 6'2", and you think it's easy. It's not easy. It just looks easy sometimes, but it's not, trust me. Trading will never be easy. It just looks easy sometimes. And the second you disrespect the market or the second you think it's easy, the market's got a lesson for you to be taught. And sometimes those lessons hurt. They hurt bad. So always stay objective, keep your ego in check, and work hard every single day, because you are against professionals every day. And I don't care whether it's basketball, tennis, or trading. If you're at the highest level doing something, it's never easy. Not ever. It may look it sometimes, but it's never easy. I hope you guys learned something about overcoming losing streaks. The sequence of events and how things happen matters, but they shouldn't. And that reversion to the mean is very real, and you need to figure out what your mean is, what your expectancy is. And then it'll also calm you down when things aren't going as well as you think they should, but then you realize perhaps they're going exactly the way they should. I'm Jared Wesley of Live Traders. We'll get back at it again next week.